Welcome to Good Game, your no BS insights for crypto founders.
I feel like over the last 2 years, people have come up with thesis or try to imagine what AI crypto is. Like a lot of these things that people have imagined feel very forced.
Yes.
Do you feel what I mean? Like,
I do.
They try to train AI with crypto or like try to solve some crypto problems. Like it feels really forced. Like the kind of products that I think will just happen is just like people are going to build products that use some LLMs in one feature and crypto for another feature. It's like, it's very natural. And the two are so like hidden under the hood that the end user doesn't really know what's happening. Like the user doesn't need to know that this is an AI product or this is a crypto product.
Looking for your next startup idea in crypto? Check out our request for startups list and get inspired at alliance.xyz/ideas.
All right. Obviously a lot's happened over the past few weeks. And it turns out like our, I think last pod we were talking about Trump and how we were feeling. And then the pod before that, we felt, even if you listen to our podcast and listen to the undertone of our podcast, the AI meta kind of was giving us, a bit of like, I don't know, it was uninspiring. And you felt that tone within our podcast. And I didn't know it was a function of the market, nor the crypto Twitter, etc. I think it was just how we were feeling. And then obviously over the past month, if you look at the markets, it was more or less a bleed down. It's been bleeding down. And so I guess we didn't say this verbatim, but our, just the way we were feeling was exactly where the market was at, I think, which was, it was tired.
I tweeted out my exact market views after the podcast went out, just so people are clear how I'm thinking.
Yeah.
But anyway.
Yeah. I do feel like, I guess if you want to talk about the AI meta, maybe there are a couple good projects that are pretty strong, and we've highlighted those before. But I think that's across the board, right? So I think, to me, the way I see it, it's just going to be, we had this massive exuberant market with the Trump launch, Melania launch, and I feel like now the market is just digesting that liquidity flow. And then also, along with that, all of the bullish news that's coming out of Trump. I don't know where the market's going to go in the short term, but medium to long term, this is still bullish. How do you feel?
I think it's just crap market for a while.
Yeah.
We had a lot of good news over the last 2 weeks. The pro-crypto executive orders, the repeal of SAB, the stablecoin bill, and then there's David Sachs, our AI crypto czar, giving a speech about crypto, blah, blah, blah. A ton of good news. But the market didn't move. So that was bad. That was a really bad market reaction to the news. But at the same time, I think the economy is good. And if we actually get so here's a very high signal person that I follow for Bitcoin stuff.
Who?
David Bailey.
David Bailey.
So I'll read out the tweet, and this is from yesterday, right after.
I retweeted that.
Yeah. So he said, market completely misreading today's press conference. Strategic Bitcoin reserve is happening. It's a top priority directly from DJT. They are assembling the top officials in the country to formulate a plan in the next 80 days. Half of the working group is Bitcoiners. SBR is happening. So if SBR is actually happening within the next 80 days, it is structurally underpriced. It just cannot be priced in. Like this is the exact same story as the Bitcoin ETF.
Yep. Yeah.
Meaning, like when the Bitcoin ETF happened, everyone was like, "This is bearish, sell the news, blah blah blah." And what really happened was that the Bitcoin ETF opened up the universe of potential buyers of Bitcoin, basically the TradFi and the boomers, right? The SBR is the exact same story. If we get the SBR, it's the government. We're going to have it's not just the U.S. government. It's also the state governments and the governments around the world. They're all going to try to front run the U.S. government, or at least try to keep up with the pace. So we're going to get a new set of net buyers of Bitcoin. That simply cannot be priced in.
And then you also have to think about the sovereign wealth fund that's being created by the Trump administration, which is ran by Cantor Fitzgerald's Lutnick, who is also heavily invested into crypto, specifically Bitcoin. If he's leading the sovereign wealth fund, and David Sachs mentioned this in passing, but he said that there is there is a plausible scenario where the sovereign wealth fund could have crypto holdings. He can't guarantee it, but it's part of their strategy.
Yeah.
So to me, it seems like the market is just very confused. Like we got hit with like a massive meme coin bubble, right? In one situation, we've hit all-time high in Bitcoin to a certain degree, like 108, 110. And then at the same point, you have this incredibly bullish news, and the market, I feel like, doesn't know how to digest all this info.
I don't think the market is necessarily confused. I think the market has priced in a lot of good news. And
has priced in all the good news?
Has priced in a lot of good news, except for SBR. So if SBR happens, we're going to go up a lot. But until then, I think it's just crap market for a while.
I mean, this is in 80 days, right? They're supposed to have news for us in 80 days. So this crab market will need to resolve fairly quickly is the way I see it.
Yeah. But anyway, for those who need a little bit of hopium or a little bit more hopium, $870 billion asset manager Standard Chartered Bank says Bitcoin could reach $500,000 before President Trump leaves office. How would you feel? 500K.
Insane.
500K is almost gold parity.
Huh?
Is more than half of gold.
Yeah, it's half of gold.
And matter of fact, if Bitcoin goes to 500, I would not be surprised if gold goes down a little bit.
It could leave
because it means that the flow will move from gold to Bitcoin.
Yeah. I mean, did you see gold today or yesterday? All-time high?
Gold has been ripping.
Yeah, it's been crushing it. What do you think is driving that? Do you think it's just the massive uncertainty of tariffs across the globe? And
it's massive uncertainty towards Trump. Because Trump 1.0 was basically total chaos.
Yeah.
A ton of volatility. Trade wars with everyone, including its allies. It's a hedge against chaos, but also a hedge against just the fact that the US has so much debt.
And there's so much volatility across all the currencies. So you're better off just risk offing to gold at this point.
Yeah.
I mean, did you see how the Canadian dollar just cratered?
It just got crushed by the tariffs.
Yeah. So I do think that there's an element of that as well.
By the way, I'm really surprised, pleasantly surprised by how fast the government is moving right now, especially Doge. It's madness.
So I did some back of the napkin math, and roughly they said that they're able to save about $1 trillion in deficit a year.
Yep.
So right now we're $2 trillion in deficit every year.
Yep.
If that's 1 trillion, then you could think over a larger period of time, our deficit as a country can go down over time, right?
Yeah.
And there's massive implications in terms of interest rates for people, inflation, et cetera, that can have a massive impact. That's even without the Fed getting involved.
Yeah. And the Fed is probably rethinking their strategy right now. Because of all this impact from the government. Like that, it's going to change how fast they cut rates.
I would assume they would do this sooner rather than later. Is the way I would see it, right? Or would they take a longer period of time? Like, how do you think they would balance out cutting then at this point? If there's, deflationary mechanisms in play here, would they just wait and see?
I haven't thought about this deeply. No, I don't have a view yet.
Yeah,
I don't have a view yet.
Yeah, I'd be curious as to how. What's also funny was Trump put a message out a couple days ago. First, he was talking shit about Powell. He's like, Powell needs to cut. I don't care. He needs to cut. then a couple of days ago, goes, you know what? I'm glad Powell didn't cut. I really respect his decision, which was an interesting about face.
Yeah.
And I don't know how to read that either, but it was also very interesting how he mentioned that.
So the reduction of government spending in the short term, I think, is deflationary.
Yeah,
because you're literally taking some stuff from the economy. The government spending is part of the economy. It's like macro 101. But also the tariffs is inflationary. They put it on a hold, but if they resume the tariffs, it's inflationary.
I think it's a game for Trump. He did this in 2017 as well, and he forced all the parties to come in and renegotiate. So for him, it's just news, right? Like he got from Mexico 20,000 law enforcement to watch the borders, right? That would, in theory, cut the reduction of drugs coming into the market and migrants. You have 10,000 people from Canada that's watching the borders now. So in terms of illegal drugs, etc. I read news that a lot of like the cartel have been reorganizing in Canada as well before this and shipping products through there because Canada sucks in terms of the flow of drugs coming into their country. And so I think just those two like bulletin news items really is like massively bullish for at least our struggle in America.
Yeah.
So I think it's just trade. I think it's him just like cutting a deal. He just wants to cut a deal. Yeah. China doesn't want to cut a deal. So now he stopped all the flow of the U.S. mail coming into Like he put tariffs on them. China's like, fuck you. We're going to put tariffs on you. He's like, you know what? Fuck you. And then so now like U.S. mail will not deliver anything from Temu and I forgot the other one. Alibaba is an example. And so then both of their stocks irrespectively have gone down 2 to 5%.
Yeah.
So I think he's just going to force them to do what he wants is the way I see it.
Yeah.
So I think this is all short-term headline risk, but I think long-term he's going to get what he wants.
I don't recommend people to trade these headlines.
Do not trade these headlines.
No one outside Trump's in-group has any real edge.
I don't think Eric Trump has edge. He told everyone to buy ETH the other day.
I mean, ETH went up 5% after his tweet.
It did, but well, I mean, it was around like the 2100 range, right, or something like that.
Yeah.
But yeah. On the other news, did you hear that someone tweeted out that Justin Sun got liquidated for ETH?
Yeah. That might have been okay. So there's a rumor that Justin got liquidated. His ETH position, his leverage ETH position got liquidated, and that might have been that wick to like low 2000s. That might have been him.
That might have been him. We don't know yet, but now he's trying to launch some sort of like decentralized stablecoin as a way to make it all back.
Like Terra.
It's all rumors on Twitter.
Yeah,
not substantiated by any means, but it's fun to look into this and read through it.
Did DeepSeek happen after our last pod, or
we talked about? Funny enough, we talked about DeepSeek when it first launched, which was a couple months ago.
Yeah, and
we talked about the impacts of it. More or less,
yeah.
But we didn't dive deeper into the most recent news, which is the $6 million quote unquote what they launched.
Yeah.
But everyone's giving me mixed stories. So like David Sachs, like there's no way they could have done that for $6 million. Yeah. They have a lot of H100s, etc. I don't know who to believe.
Yeah, but regardless, the takeaway is that the inference and training are going to continue to get cheaper and cheaper, and that's really good for the application layer
for consumers generally.
In AI.
Yeah,
and obviously there is a parallel story in crypto that we've been.
You tweeted about this.
Yeah, we've been beating the drum on the fact that crypto is also moving up the stack from infra to app because the infra is getting cheaper and cheaper. So it's happening in both AI and crypto.
Yeah, really. I mean, even in founders in crypto, I think more or less, like I was on some talk yesterday with a bunch of founders. A lot of them were building in AI, and they're like, where should we build on the AI side? And most of them were like deep infra. I said like consumer, mostly. Yeah. I mean, there's some like outliers, of course, on infra, but you know, I feel like there's a lot of heavy competition there as it is.
I just took a look at our startups in the next batch, and about 30% of them use AI in the product, in one way or another, and none of them calls themselves an AI startup or AI crypto startup, but they all use AI as a feature here and there. So like it's really for me it looks like a lot of the use cases of AI is cheap enough now for consumers, and it's getting adopted pretty widely in products.
I think in the future, like every startup will use crypto and AI in some shape.
Yeah.
So like it could be any shape. So they wouldn't call themselves a crypto startup or an AI startup. I think they'll just be startups.
Yeah.
Which then opens up the entirety of like the TAM of what you could build in crypto or AI and the opportunities that are out there. In fact, like obviously like our viewers don't know this, but we're getting a lot of startups that are building startups that are not even in crypto now, right? They're purely AI.
I read 10 applications this morning, and around 7 to 8 of them are pure AI.
Yeah. So what's driving this phenomena, do you think? Is it, I mean, obviously part of this is maybe just our program. So I read one of the applications the other day, what this person said was like, yeah, this is only an AI startup, but I could see some applications for crypto and I want to explore that. But he has nothing to do with crypto. He has no idea what crypto is, but he just wants to explore, which I thought was very interesting. And I think that adds to our thesis that every startup will find crypto and AI as just a feature into their core.
I feel like over the last 2 years, people have come up with thesis or try to imagine what AI crypto is. Like a lot of these things that people have imagined feel very forced.
Yes.
Do you feel what I mean? Like
I do.
Like they try to train AI with crypto or like try to solve some crypto problems. Like it feels really forced. Like the kind of products that I think will just happen is just like people are going to build products that use some LLMs in one feature and crypto for another feature. It's like it's very natural, and the two are so like hidden under the hood that the end user doesn't really know what's happening. Like the user doesn't need to know that this is an AI product or this is a crypto product.
Yeah. You brought up a really interesting point, which is Peter Thiel, like I listened to one of his podcasts recently about how he talked about how people thought of AI before OpenAI. And there was like two schools of thoughts. The one school of thought was that, AI is going to become authoritative like China.
Mm-hmm.
And everyone thought that was the future of AI. And then there was another aspect of it, which had nothing to do with day-to-day use, which is like, it will completely take all of our jobs away. And it's like, that is the other school of thought. But no one really thought about the middle pathway, which is AI could improve our lives on a day-to-day aspect of it and improve the way we do business. No one saw that coming. And so similar to what you're saying here is that, AI, crypto, all this stuff, people will have this worldview on what these startups are, but it turns out there's just going to be features as part of our core product offering that will make a user experience 10x better. That's all it is. Is the way I'm starting to see it. There is no like crypto startup. There is no AI startup. It's just going to be a way to do better or to increase your productivity in some shape.
Yeah.
So I think everyone always has this polarized thought process, but it's really somewhere in the middle.
Yeah. What else happened last 2 weeks?
So Vine, the founder of Vine.
Oh yeah. Vine, JellyJelly. Let's talk about that.
Vine and JellyJelly are the two most interesting things that happened. And it continues to showcase why the power of tokenization is going to become one of the massive opportunities for crypto. app tokens, I would call it meme tokens, RWA tokens, all of these are kind of like a subsector of tokens. What are your thoughts on it? Do you want me to give the story, or do you have?
You should give the story.
Okay. So the two stories that happened was, right after Trump's token launch, people started to see tokenization as a part of an interesting go-to-market strategy. And so the founder of Vine, the previous founder of Vine exited to Twitter for $30 million in 2018 or something like that. And they were one of the most popular video apps in the world. Jack Dorsey took it and shut it down. Obviously, he was like a hardcore, Bitcoin maximalist, and he thought of a different world to build for. But as it turns out, given the talks with TikTok and TikTok going into the hands of the wrong people, there's an opportunity for another competitor to come in and compete for this business. And so Elon's been tweeting over the years about, should we bring Vine back every few months? And he would even have a poll on it. And so the ex-founder of Vine, Russ, then proceeded to launch a token and say, like, let's bring back Vine. And so if you look through the docs, 5% of Vine goes to the token supply goes to Twitter if we successfully bring back Vine. Over 150,000 holders now from the day of launch. And ultimately, what he's doing is building this kind of memetic, using memes and the memetic energy by a token to bring back the excitement around Vine. And I think this is a very interesting use case, right? And if you look throughout what's happening, I'm part of the Vine private group on Twitter, and you're starting to see people paint Vine on walls across different streets of the world. People are taking pictures of, or printing pictures of Vine's logo and pasting against walls. And it's kind of becoming this energy, raw energy to bring Vine back. And so that's the story. So I'd love to hear your thoughts on it.
How much of the supply does Russ own right now?
5%. And that he said 5% of all of it's going to be donated to X.
So he only owns 5% now. So then,
he doesn't, technically he owns nothing.
Right. But that means 95% is circulating?
95% circulating.
Wow.
And he launched it on Pump Fun.
Yeah. But how did he get the 5%? He just sniped 5%?
Oh, self-purchase.
Okay. There's something there. I don't know what to make of it yet, but there's definitely something there.
Yeah. I agree. It's funny because after that happened, I had two startups that reached out to me, and they're like, "Hey, look, we don't have a protocol. We're like we're not like a SaaS business, but we're somewhere in the middle. I'm curious if we could just use token as a go-to-market strategy." I'm like, "Sure, why not?"
Yeah.
Another person reached out to me that's building a pure AI startup, AI agents. And he's like, why not just attach a token to this and compete against my counterparts that don't have a token?
Yep.
That could help me acquire more users.
Yep.
So the insights that I'm learning here is that tokens, or what I call app tokens, are essentially advertising dollars.
Yep.
And, as you get more and more people excited about it based on who the founder is or whatever, you could use this as a way to acquire users, or acquire some sort of mind share, right? Like advertising dollars equals virality, meme coins or tokens, app tokens equals virality is the way I see it.
Yeah.
And maybe some sort of acquisition funnel as well. Jelly also did this. Sorry,
this stuff wouldn't have happened in the Biden admin, right?
Nope.
Obviously I'm not a legal expert, but you could, there is a securities law risk with this, right?
I don't know. I mean, as long as it's a token that's not tied to any future quote unquote equity or revenue, then
right. But what I mean is, at the very least, the perceived risk was a lot higher.
Yeah.
During Biden.
100%. So I could see all startups moving forward use token as a way to self-fund, or I see them using it as a way to acquire users. Is the way I see it.
Yeah.
That is a very plausible feature. I've had so many Twitter disputes with so many people about why that's not the case. I won't name names, but
you can name names. I know who you're talking about.
Yeah, Fubar.
Yeah.
He's like, oh, you can't do that, and all the ETH maxis ended up liking his tweet or whatever. So I called him out on it. but became. I just blocked him because that's what I do with maxis these days. It's a very different world though, right? From the world that we came from. So I understand it's harder to digest. Obviously, it's happy on a chain that you're not happy about, but at the same point, this is where innovation is happening at.
Yeah.
So
JellyJelly is a similar story, right? Do they own
Jelly's
anything?
the same similar story.
Do they own a percentage of the supply?
I don't know how much they own. I didn't buy that one, so I have no idea. It happened way too fast also. So
every single time they launch a token, I'm sleeping. Like they always launch a token at 9 p.m. I have a rule for myself to just turn off all the screens for 2 hours before going to bed.
Yeah, I know.
To sleep. Every single time, like Trump, 9 p.m. Vine, 9 p.m. JellyJelly, 9 p.m. Every single time.
Generational wealth, man.
Probably missed out on like fucking 8 figures.
I've been texting you and I'm like, bro, look at this. Like no reply until like 5 a.m.
Yeah.
Man. But whatever. Now's a good time to buy Trump or Jelly or any of the other shit coins. But I mean, these are just experiments that are happening, and I think it's just going to get even better. It's going to improve over time.
Yeah. There's definitely a consumer behavior change that people now think that launching a token is normalized. Anyone launching a token is normalized ever since Trump.
Yeah. Agreed. And okay, so that's one aspect of it. And then recently we launched Clout along with Tribe, which is a social token meta. So we talked about like startups and app tokens. Now we're talking about Clout and Tribe. And I think creator tokens is also similar in that where the thesis is like, cheap follows, follows are cheap, right? Like you can get follows pretty easily. The thesis here is like, will people pay for social capital, right? And could social capital be a way to showcase, do you really have clout or not, versus a world where there's cheap follows, as an example.
Yeah.
So we're running two very, very distinct experiments. One is more user-friendly. One is more easy and normie-friendly. That's easy for anyone to just buy and hold. And the other is a bit more crypto-native, where you have a way to engage with the creator. You have like streaming, so you can live stream with your audience. And then there's like a subscription model. So those are two distinct experiments we're running right now. But yeah, so that's kind of like what's happening, I think, on the broader speculative side with crypto, on the token side. Tensor has a lot of thoughts around this, especially on what's happening on the consumer trading side. We have both Richard and Ilja, the founders of Tensor and now Vector. Let's bring them on for a few minutes to learn more about their thoughts. What ideas are you hearing about that are consensus, and what is the direction that you want to take Vector?
So we built this really nice mobile native trading experience for Memecoins. And we're probably one of the first to attempt this. I guess Moonshot is the other big one that I can think of. And I think there are a lot of other people coming into the space now that they realize you can build a great trading experience with an embedded wallet on a mobile native app. And the logical conclusion would be, from users is, hey, can you take all of these pro meme coin trading apps and bring it to mobile? So I can do the same thing that I do on, for example, Photon and BullX, which are two of the most popular meme coin trading apps on desktop. They have very sophisticated stats. They have trading view charts, basically like what you would imagine like Tensor is, but instead for meme coins.
Yeah,
we could do that. We could build a pro mobile experience. But do you think from first principles, will pros actually try to trade with this sort of terminal experience on a mobile native app? They might, but I think given what history has told us, mobile is very much for folks who are on the go. They want to do stuff quickly. They want to pull it out on the train, at work, in between breaks. And they're not there just sitting on their phone all day trading for 4 or 5 hours at a time, right? That's what you do on desktop. And so just by thinking from first principles, we don't believe that building a pro trading product in a mobile native form factor is the end state. What the end state might look like is you have a great, easy to use trading experience that's not too pro, so it's still amenable to retail on mobile. But then you have maybe a desktop app, and both of them talk to each other. But right now, given sort of the pro desktop space has been completely, it's a red ocean, right? Like there's like 5 different people building the exact same thing. We want to carve out that retail mobile product first before even looking at desktop. And so we're trying very hard in a way, not to listen to our users telling us to build pro features into the app. Instead, we want to build something that they've never seen before, that they realize, hey, this is actually something that you can only do on mobile. You can only get certain alerts on push on mobile, tap into it, and quickly copy trade someone. You can't really do this on desktop. And those are the stuff that we want to build in the mobile native app.
Got it. I feel as if so there's some really good features that Photon has. I'm curious on like the audience here as well, because there's a part of the audience that uses Photon primarily to snipe. So you have like features like meme scope that ultimately gets people early into some of the tokens that get launched. And then on your perspective and from your side, what I'm seeing is people like to just share trade ideas and trade with each other. So how do you see those markets differ? And where do you ultimately want to take this? Is this more going to be for general consumer with friends? Like, how are you thinking about that?
Trading is a very difficult multidimensional game.
Yeah.
And that's also what makes it really fun. Games are difficult or fun. And different people play this game very differently. This is something we kind of realized through building our second trading product now. What's interesting is when we came into NFTs, we saw everybody was playing the game one way, and then we built all these pro tools and we let people play that game in a different way. And I think we're doing the same thing with this product in almost the opposite direction, where everybody's playing this meme coin game in a very quantitative, analytical pro format. And we're introducing this whole new way of playing the game, which is based on social signals.
It's basically like what good startups do is they come into a market and they shift the landscape. Instead of competing with existing startups, they literally shift the landscape and they say that the things that you used to compete on are irrelevant. So for us, that's what we're trying to do. We're not trying to say, come to Vector because you'll get a faster, better sniper. What we're saying is the sniper is now irrelevant. Yeah. And the way we make it irrelevant is we give you better signal, something else, something more fun, something more engaging, something you can consume on the go, on the bus, like on the toilet. And that's it. Again, like maybe there's no market for that. Maybe nobody cares. Maybe that's the worst idea in the world. But there's only one way to find out. And if there is something there, we'll have it entirely to ourselves. And I think so far what we've seen with Vector is that there is something there. People do like this idea of sharing a trade with other people in the form of a broadcast, and other people like aping into broadcasts. That's the whole thesis for the app. It's literally like Twitter does one thing, it lets you tweet. Vector does one thing, it lets you broadcast. Everything else is just like getting you to that point.
Got it. Yeah, I mean, on my timeline, at least, I see a lot of Vector trade where they show their trades and like
somebody made $2 million today. Did you see that?
Yeah, they
somebody
put in like $5
took out $2 million
or 500.
What did they buy?
I saw that.
Let's see.
Like, was it one trade or multiple trades?
Yeah, there's an asterisk to it. So this is something interesting that happened. This was a coin that was launched on Pump Fun for someone's project, and the dev actually made their first trade on Vector almost as a way to advertise, where they launched the project. They weren't sure where it's going to go, but they were like, hey, I'm just going to buy $500 of my own token of my own project that was launched on Pump. And if this goes somewhere, then this is great, right? Because this becomes a viral moment. People will screenshot this and share this. And that's exactly what happened. So a dev who launched a project basically used Vector as a way to advertise their project once it made it big.
So under the hood, you have Radium, right? Which protocols do you have under the hood? Radium. Do you use Pump under the hood?
Yeah, Pump, Radium, Jupiter, Orca, all of them.
Okay. Yeah, I mean, this is like what happened with Vine and JellyJelly, right? Like, what's your take on those things? Because like those tokens, like they got a lot of hype initially, like it pumped, gathered a lot of attention, but then like just died. I don't know if there's anything we can learn from this.
Well, Jelly died. Is that Vine is doing pretty good actually.
Vine is like flat. Jelly is a Christmas tree pattern.
Jelly is a Christmas tree. Vine,
Yeah,
Vine. Yeah, go ahead.
Vine is okay.
Yeah. It's weird. Okay, so I think there is a paradigm shift in how we think about assets going forward. This is something that we talked over and over again about, which is we're going from a world where there are a countable amount of assets. In a traditional world, that's like 30,000 U.S. equity stocks, and maybe there's like other assets in the long tail for bonds and debt collateral instruments. In crypto, DeFi Summer basically introduced still yet a countable number of assets. It was difficult to launch any token that had a meaningful amount of liquidity, and there were maybe like 100 tokens that people cared about. With Pump Fund and what they did with the bonding curve, they've basically opened up the floodgates for a countably infinite amount of tokens, which means the way you should think about these tokens is that each individual one will have a very short period of time where you might speculate on, but there'll be an infinite number of these moments that happen, and there'll be different assets. So instead of thinking about trading a single asset end to end for many, many years, which is what you might do with a token like Bitcoin or Solana or ETH, you should think about like rotating between different assets. And I think that's where an app like Vector shines, in that there's always new content, there's always new tokens being shared, and you can keep up with the trend.
So I think, and I've tweeted about this before, but, seeing people outside of crypto coming into crypto via a token is a really interesting phenomena, to say the least. I maybe want to start with that. It's almost as if it's like a go-to-market strategy, or you're using a token as a way to get attention and acquire users. And you saw this with Vine, which we talked about for the users that don't know, but Vine, or the OG founder of Vine, launched a token to spark at least the Twitter team to think about building a Vine client or bring back Vine. And it's going pretty viral. There's people all across the world that purchased a token. I think over 140, 150,000 holders now. And there's people that are like painting Vine logos across the walls. They're putting pictures up across, in different streets, similar to like what's happened in New York. And so it's kind of creating this like phenomena of getting people excited about bringing Vine back. On the other hand, Jelly saw this and said like, maybe we could do something similar. But I think the way they launched it was probably not the best approach.
Wait, what do you mean there? Imran, what do you mean? What do you mean the way the launch wasn't the best approach? Like how would you fix it?
Well, I mean, like, you can't fix a Christmas tree by any means, because I think the problem also is like, everyone just jumps on the same train at the same time, and it creates this like hype cycle like within minutes. And you really can't. You almost have to move away from like the hyper speculative crowd and try to build something really organic. I don't know how to solve this, but that's a part of the problem. The other part of the problem is snipers. They end up eating 5 to 10% usually within the first few minutes of launch. So even and they do this across the board. There are many, and I've experienced this with Clout. So like, there's a lot of like problems with snipers, and that's a completely separate problem to solve. So when you have both of this, and then you have some, reputable person, like AKA founder of Venmo, that's launching Jelly, the token, it's just it's going to happen naturally. You can't you have to build a completely different way to solve this problem. But that's one element. The second element to this is like, maybe that's okay. And the people that'll dump it later, or the people that dump it and leave, the buyers that see the vision will ultimately stay, and then they hold for a longer term period. But that's separate too. But finally, I think what's happening in this phenomena is the fact that you could launch an app with a token, and that can ultimately give you attention and mindshare instantly, versus going the other way around, where you just have a publicity stunt, you write an article, or you get VCs to back you to get you some credibility. You just launch a token and you get some attention, and then from there, you have to use that as a way to build a community and then kind of go about it that way. And, just final point here is, so, I saw Vine very, very early. I thought it was a scam at first. I think it got hacked. It was like, what's going on? It was like around $1 million market cap. And then, but it was Russ, right? And he recorded a video of himself, etc., and validated this was who he was. Since then, the community has taken over. Like, there's an entire Vine group of like enthusiasts, over 8,000 people that are just talking about Vine all day, every day.
CTO.
Not CTO, but just like, he's building a good community. Like,
where are they talking about it? On Twitter or Telegram?
Under Twitter, you can create Twitter groups, or like a Twitter, a Twitter group.
Uh-huh.
So I'm a part of this Vine group, and these people, like, my entire timeline is just about Vine. And so, like, this phenomena, I think what Russ is doing, and maybe what, the founder of Venmo is doing, his name is Ismail, they're ultimately using tokens as a go-to-market strategy. And I see this as like an app marketing token. That's it. And that's quite interesting to me in terms of where the future can go. Well, I think the paradigm that we're entering right now is the fact that we're going to tokenize the world. Like, it's very
everything.
clear.
Yeah.
Ando I just sent you a tweet, Qiao.
Yeah. They're tokenizing stocks and bonds and shit.
Yeah. They're building a platform that enables anyone to tokenize stocks, bonds, and ETFs on chain.
Yeah.
So the world is, with the Trump administration coming in, hyper tokenization is on the menu.
It's going to happen.
You know what's funny? If you go back and read the OG blog posts and thesis on crypto, like the very first ones, they basically talk about two things. They talk about this idea that you can now have things that are owned in a decentralized fashion, which is basically like owned by the community, which you couldn't have before. And then they talk about this idea that tokens can be used to bootstrap networks. But remember that networks doesn't just mean liquidity. It's also attention. It's like when you start and there's nothing, and you're trying to bootstrap a two-sided marketplace where on one hand, like for Vector, for example, you have the callers, and on the other hand, you have the traders, right? Token is a great way to incentivize the cold start of the network, because you basically all of a sudden have momentum, excitement, people care, and they like a lot of stuff starts happening. And if you build a product people like, they'll stay. And I think what's the really interesting arbitrage that's happening in crypto right now is, for the last 4 years, because of the old administration, everybody was basically forced to believe that tokens are securities, and that the only thing tokens are good for are assets. And we almost completely forgot that actually the initial idea for tokens was nothing like that. The whole point was not to have them be securities. The whole point was to have them basically be mechanisms for bootstrapping networks into existence. And I think the smart founders, now that the administration changed, well, they see this and they're going to like really go at it and like really build products that leverage that idea to the max. And like 2-3 years from now, everyone will catch on to it, and tokens will be everywhere.
Yeah, part of me wonders, there are almost two classes of tokenization happening right now. I think for the longest time, people thought that what you can tokenize are financial instruments. So that could be representations of equity, right? It could be like ownership in the form of rights to future cash flows. That might be considered more like a security. It could be tokenizing RWAs. So it's still like some representation of some asset or commodity in the real world. And then now we're seeing actually tokenization of things that are like memetic, where the value is primarily driven by supply and demand, and people believing that this is something that should have a certain price. I'm going to buy it because I think other people will also buy it. And I guess one thing that's not clear to me is how well will these memetic attention assets do between cycles? Because I think in a bull market, totally makes sense. There's like a lot of froth. There's a lot of capital sloshing around, and people like want to, spend that capital and speculate on things and hopefully make profit. And I do wonder if attention assets, in this case, can last multiple cycles, last throughout the bear market, and this actually becomes a dominant behavior that people do for entertainment or, to try to make make a profit.
I think attention assets already lasted multiple cycles. So in the first cycle, it was the color coins on Bitcoin. Like meme coins are not a new thing. Like it was there since for 10 years now. And then last cycle, we had NFTs. These were by and large attention assets. Now we have meme coins, but like we gave these things different names, but ultimately they're fundamentally the same thing, just in different forms. Last cycle, if we had blockchains that scaled and cheap enough, it would have been meme coins, not NFTs, that were the dominant form of on-chain speculation and onboarding. So I think is unless we find a new form of tokens to represent attention next cycle, I think meme coins are here to stay.
Yeah. Obviously, we're very bullish on attention assets. That's why we built Vector. We saw the trend from NFTs to meme coins this cycle. NFTs last cycle, meme coins this cycle. Yeah. So I guess maybe the point here would be attention assets are quite reflexive, and they're more maybe market dependent. Where in a bull market they do really, really well. In a bear market, maybe they're more tapered off compared to RWAs that represent financial assets.
It's funny, right? I think crypto is in this weird spot right now where, forgetting the word, when you try to like take a new idea and pigeonhole it into like old patterns or old product behaviors. I think it's called, anyway, I'll remember later. The point is, people still see crypto as a financial industry, and to an extent it is, but it's so much more. Crypto is really, it's an attention industry. It's basically the new advertising. And I think most people haven't really quite understood that yet, that you can do a lot more with these tokens than just create assets and create prices. And that's why, like, to me, there's two really exciting products you can build in crypto. I think there's stablecoin products you can build for a developing world. That's super exciting because it's actually solving a real problem. And then there's the crazy long tail stuff for like attention assets that have a lifespan of 13 seconds. I think everything in between is kind of boring. Like, I just think like tokenizing equities on chain is not fun. I just don't see how that's going to be like a 10x improvement. And like, to me, the most interesting companies, the biggest companies are going to be built at these two edges of the barbell.
How big is Vector now? I mean, I saw you guys hit like $1 billion in trading volume, right?
Well, on our peak day, we hit like 9 billion a year.
How much?
5 million a day, 9 billion a year.
Okay.
Yeah, so it was 25 million a day. So if you analyze that, that's 9 billion. Obviously, that was peak during Trump. We don't think we're not going to get back there. It's just the app is still gated. It's just like products like this take a bit of time to roll out and like fix a bunch of stuff along the way. But yeah, to answer your question, 20,000 daily active users, 5,000 daily active traders, doing anywhere between 5 and 15 million of volume per day right now. Remember, this app is like 2 months old, so there's a lot of work that needs to go into it.
And it's still in beta, right?
Yeah.
Whitelisted beta.
Yeah, the beta, people almost confuse it a little bit. Yes, there's an element of give us more time to build the product, but there's also an element of, well, let's be very deliberate with our go-to-market, which is, because this is a product where you follow other people, it's a lot better if you join the product when your friend invites you, because you have at least one person that you trust and you follow. And so the whole thing with invite codes is getting people to invite their friends. The other nice thing about that is when somebody joins, because the product isn't super polished just yet, they have somebody they can ask questions to and be like, yo, why is this not working? What does this mean? So there's like a little bit of hand holding that's going on with a go-to-market like that. If you just drop people into the product with like no support, the product really needs to be good. It needs to be like near perfect, like no drop off, like onboarding fully smooth. People understand how to deposit, everything just works. And if the product is not there, you're just churning through users that are really hard to get back. Because people try an app, if they abandon it, they almost never go back.
Cool. Well, really appreciate you guys coming on. For users that want to test out Vector, what's the best way to do that?
Yep, you can download Vector by going to vec.fun/download. You can also find it in the App Store. Just search up Vector Crypto or Vector. And then the code to get into the app is good game, one word, all lowercase.
GG.
GG. All right, guys. Thanks so much for your time.
Thanks for having us.
Thanks, guys.
Yep.
Anything else?
Let me see.
Let's see what I have in my bookmark.
Yeah. I have a lot on my bookmark too. So give me 1 second.
I bookmarked a funny tweet about Tesla. So Tesla released their earnings last week, and the earnings were pretty shit. But Tesla went up 5%. So then J.P. Morgan put out a research on what happened, and he said, I'll read it out. It's not clear to us why Tesla shares traded as much as 5% higher in the aftermarket Wednesday, although we have some leading theories. Perhaps it was management's statement that it had identified an achievable path to becoming worth more than the world's 5 most valuable companies taken together, i.e. more than the $14 trillion combined market capitalization of Apple, Microsoft, Nvidia, Amazon, and Alphabet. Or maybe it was the management's belief that just one of its products has itself the potential to generate north of $10 trillion in revenue. It may have even related to management guidance for 2026. No financial target were provided, but it was said to be epic. And for 2027, 2028, ridiculously good. What does seem clear is that the move higher in Tesla shares bore no relation whatsoever to the company's financial performance in the quarter just completed or to its outlook for growth in the coming year. I've never seen this much cope from TradFi about Tesla.
Wow. I don't even know how to decipher that. Oh my God. Oh, Sailor just tweeted, MicroStrategy is now strategy.
What does that mean?
They're no longer micro strategy. They're strategy.
So they're like DeFi Alliance, but Alliance. DeFi Alliance is no longer DeFi Alliance.
Huh?
DeFi Alliance is now Alliance.
Yep. Strategy is one of the most powerful and positive words in human language. It also represents a simplification of our company name to its important strategic core. That's quite funny.
Hey, I ran my annual experiment of tweeting Solana is the final form of blockchains just to see the reactions.
Oh my God. You should have seen the amount of cope that was on your replies.
No, it was a lot better than last year. Because last year I actually got dunked by like every single ETH maxi. But this year, a lot of them crashed out 2 weeks ago. So the reactions this year is a lot better.
All right, let's talk about this. Because I think that this is something that you and I were just chatting about earlier today. You know, obviously Alliance is a unbiased startup accelerator. Well, we try to be unbiased. And we have a combination of, I don't know, like 100 different alt layer ones are out there right now. Alt layer ones, that also includes layer twos. And you also have some new that are launching, right? So you have Mega ETH, Monad, Abstract. I don't even know the others. Story Protocol and other. Sweet. I mean, those are Hyperliquid. So there's Eclipse, Atlas, Celestia. I mean, the list goes on, right?
Yeah.
And so you have all of these startups, layer ones and layer twos. And if you look at like the quality of those startups that are building on there, they're like, obviously we read the thousands of applications. The quality is very different from the quality of startups that we're seeing on, say, like Base and Solana. What's happening here?
What do you mean?
What's happening? Like in terms of, we have like a ton of alt layer ones that are launching.
Yeah.
I was telling this, I'm exhausted of even following this stuff.
Yeah.
Blast had a successful launch, quote unquote, but then really at least the way users felt is that they felt rugged or unheard.
Yeah.
In terms of user feedback. Abstract, on the other hand, launched, to my surprise, pretty good, but people still didn't like that they were focused more on the consumer side, etc. And so now a ton of people are leaving Abstract.
Yeah.
And I think this whole like rotational launch is becoming too much for users.
Yeah.
And so we're seeing less and less liquidity flowing into these alt layer ones, is the way I'm seeing it.
Yeah. Well, okay, let's talk about this because
Yeah.
it's really important for investors and founders because we have information that pretty much the rest of the space does not see because we're at the bleeding edge of working with startups at their earliest stage. A year ago, I would have been indifferent between a leading Ethereum layer 2 and Solana. But after seeing all our startups launching on both ecosystems, it's just really clear at this point that you have to be on Solana. Because we've just seen so many empirical examples of startups launching the same product on Solana versus Ethereum layer 2. And on Ethereum layer 2, there's just no traction, no users. And magically on Solana, it just works. Like, I've seen so many such examples that at this point, it's irresponsible for me to recommend founders to not build on Solana. Like, that's how strong the evidence is.
So just to support your claims, two of the staunchest base supporters just left to build on Solana.
Who?
Alex Mazmej.
Yeah.
And the other one was Salvino. Salvino Armati, who's building Yapster.
Okay.
And so, like, what you're saying is true because these, they are some of the staunchest base supporters, and now they've left to build on Solana.
Yeah.
So why do you think that is?
It can get users much more easily on Solana. It's that simple. Matter of fact, like for the EVM developers, it's really hard to build on Solana. Like they have to learn all the tooling. It probably takes them a month or two at least to get up to speed with all the tooling, Rust, and all that stuff around Solana. But even then, they think it's worth it.
Oh man, this is so.
By the way, I say this as someone who has fucking held ETH since the Genesis block.
You sold though.
I sold last year, but I've held it for 10 years. Imagine how hard it is to have held an asset for 10 years and then be like, fuck, it's kind of over.
It's over. So, yeah, I mean, I thought Base had the best strategy because they have distribution. And, Jesse's strategy is like, I want to help builders go viral. I watch a lot of his, podcasts and recording. You shared some with me too, if you remember. And so the concept makes a lot of sense. But what doesn't make sense is the fact that when people launch on that chain, and etc., they don't get a lot of users and they don't get a lot of liquidity, what I call speculative liquidity, which is what you need in order for a lot of these apps to work. And it seems like the degens on Solana are more speculative and they're more willing to try new apps versus the users that are on Base.
So when we say speculative, it doesn't just mean that these are traders that want to use some sort of trading apps. It means these users are very open-minded to new things. They're willing to try new things.
That's right. So it almost seems like the user archetype is very different that's on Base versus on Solana.
It's very different. And we've known this we talked about this on our podcast for 2 years now.
Yeah.
But initially, a year ago, it was our hunch, right? Like we had a hunch that the archetype was different. But now there's real empirical evidence that the two user groups are just completely different.
And is that cultural? Because obviously Coinbase Base has a very, very different culture. And it's mostly, I'd say, corporate aligned.
I think it's culture, but also products. I feel like there's not a EVM wallet that's even on par with Phantom.
Well, Phantom is the EVM wallet now.
Right. They have the EVM wallet, but but they're still Solana first.
Yeah.
But can you think of an EVM wallet that's as good as Phantom?
Maybe Rabby.
But on EVM, it's so fragmented. As a new user, there's so many wallets to choose from. It's a lot of mental burden. On Solana, there's only one right now.
To me, it seems like I hate to say it, but right now Solana is winner takes all at this point. I mean, there's some upstarts. I'm not saying. I mean, like the battle hasn't been done by any means. The battle can go on for decades, but Hyperliquid is one that's, there's some interesting startups that are building on there. They have a very good narrative right now. Sui Aptos is another one. What other final forms of blockchains do you see?
To me, the final form is like there's 4 or 5 chains that are in the final form category.
Okay.
So that's Solana, which is obviously the leading, far ahead of everyone else. But outside Solana, there's Sui, Aptos, Monad. To me, these are in the final form, in the sense that they're fully taking advantage of modern hardware, maximizing throughput while ensuring sufficient decentralization.
Yeah.
Okay. And then on the other extreme, so actually this is like sort of in the middle. On the extreme, you have Ethereum, which is trying to max out decentralization, World War III resistant, pure like government, 100%, 120% government resistant, but sacrificing a lot of scalability. So that's on one side of extreme. And on the other side, so and empirically, I think that thesis has been proven to be uncompetitive, at least when it comes to on-chain transactions, like the volume of people doing things on-chain. On the other extreme, you have things like Mega ETH and Fogo that are trying to centralize the nodes, right? Basically sacrificing decentralization for speed, specifically for co-location, right? Like when you have market makers that can co-locate with the nodes that are in a centralized sort of data center, it's possible that it's more friendly to the market makers. Market makers are more interested in making markets, in providing quotes on this type of systems compared to decentralized systems like Solana. But that thesis, I think, is plausible, but it has not been proven out yet because these chains are not in production yet. So we'll have to see. I think there's a maybe 10-20% chance that they'll do something against Solana, but my base case is that Solana right now is by far the leading chain, and it has very durable moats in terms of users, throughput. And by the way, like we haven't even talked about FireDancer. Jump has basically the best engineers in the world when it comes to high throughput distributed systems. I can't think of many teams that can compete with Jump. And Jump is, by the way, behind FireDancer. So Solana has the moats when it comes to users and
00 too, by the way.
And 00. 00 is also like very much HFT. It comes out of that community and DNA.
Yeah,
like it's all about like communicating between nodes the fastest possible. That's what HFTs do best. And by the way, Hyperliquid also comes out of the HFT world. So does DeepSeek. Like there is a pattern there.
There's a pattern here. Even like when Anatoly, when he first thought of the idea of Solana, he thought about NASDAQ on chain. That was his first, that's how he thought about how this should be. That's the first use case he wanted to build for.
And interestingly, from my experience, out of all the centralized exchanges in TradFi, NASDAQ does in fact have the best technology.
Yeah.
Compared to NYSE and CME and ICE, all these other exchanges.
Yeah.
NASDAQ has the fastest, the lowest latency, the most deterministic matching engine.
Yeah.
And market makers love it. They love trading on NASDAQ because of that.
So it's almost as if Anatoly's let's find the hardest problem to build for. Right? Like, can you build, trading, market making, or an exchange on chain? And if we could improvise, if you could build for that solution, then you could build for anything, really.
Oh.
And I think that's the thesis. That's why he's so focused on that one use case, because ultimately, if you could solve for that on chain, then you could solve for anything on chain.
Yep.
00, FireDancer, the network effects of apps coming into our ecosystem. Like the founder of Clout, he's the founder of Monkey, right, which is one of the largest social apps in Web2. I mean, he's building on Solana first, right? So that kind of gives you an example of like he came to us saying that he wanted to build on Solana. It wasn't us telling him, and this is how it is all the time.
Someone asked me, so related to this, someone asked me, like, what is the split between founders on Solana versus Ethereum? Like, what percentage do we see?
Yeah.
And the related question is, what about the same percentage, but for top 1% of talents? So for the first question, I think it's about 50-50. So 50
Okay.
Solana, 50 EVM. But when it comes to the top 1% of talent, I think it's more like 75-25.
Yeah.
Do you see the same thing?
Yes, I do. And the thing is, like, that's a moat for Solana, right? Because those founders that are happy that they found product market fit will then tell their friends and others to build on Solana because they found product market fit over anything else. So it's like the structural moat that it gets over time.
Yeah.
So I'd agree with that. I also want to talk a bit about, Coinbase's strategy here. I don't want to like. I just want to talk from what I'm seeing from the outside in. Obviously, we love Coinbase. They're one of the pioneers in crypto. Respect Brian Armstrong. Respect the entire executive team, including Jesse. But to me, it seems like maybe Base wasn't the. I'm not saying this is. Maybe Base wasn't the right strategy for Coinbase. I could be wrong here. I like push back against me, but like.
I feel like Base should have built their layer 1.
I mean, layer 2, layer 1, like, to me, it seems like because they focus politically, they're a large corporate company, right? They have many cogs in the system, and they're politically aligned with Base and anything that's Base assets. And so they're not as supportive of other assets outside of the ecosystem, right? Not because, maybe it's politically and then also resource intent. Like they're more constrained in terms of resources. So they're obviously going to support Base. But it turns out it left them weak on the Solana side.
Yeah.
So much so that they didn't support the latest Solana meme coins. They didn't support the latest, etc.
Do you remember? Do you see the VVV drama?
The which drama?
The VVV drama.
Yes. Do you want to talk about that?
Well, that's basically Eric Voorhees' thing.
Yeah.
His AI product, Venice, and then he launched a token, and then within a day, it got listed on Coinbase because it's a Base asset. And then there's the virtuals backholders were not very happy because they were the front runner of AI projects on Base, so they weren't very happy. And then the VVV team or the Venice team dumped their token on day one, because they like 20% or something like that of their tokens get unlocked on day one. So there was a lot of drama.
And the two engineers from Airdrome also sniped the token right away and dumped it for $1 million.
Yeah.
They paid $30K for it or something and sold it for $1 million.
Yeah.
Okay, so going back to Coinbase and Base. I'm not making this argument. I'm making this argument, but it's lighthearted. I don't hold true to this, but I just want to put this as a position for you to think about. Coinbase focusing on Base structurally, politically, gave them a tunnel vision on Base, so they forgot all the things that are happening, or they're not paying attention to things that are happening, and a lot of the things that are happening is on Solana. And so because of that, you have like stuff like 9-hour withdrawals for Solana. They're not listing meme coins on Solana, right? And stuff that people want to trade. And because of this, an upstart came, say like Moonshot as an example, and it gave Moonshot a perfect window to, essentially bring normies on chain, and then also take advantage of the massive retail adoption of Solana meme coins. So much so that Trump ended up signing a deal with Moonshot as an example, right? And launching or co-launching his token alongside Moonshot as a window to purchase the token. Yeah. And so because of that, Moonshot brought on 400,000 to 500,000 new users on chain that eventually got rugged. Just kidding. Versus those 500,000 users could have came to Coinbase. Yeah. And so to me, it seems like they're losing kind of their macro vision of what Coinbase used to be, right?
Yeah.
And that's where I see the disruption happening here.
Yeah.
What do
I
you
was
think?
actually talking about this on Ivan's podcast. Ivan or Ivan, the Respect the Pump guy.
Oh man, I love that guy.
He's actually really smart. He's really, really smart.
Yeah,
but anyway,
yeah.
I was talking about how like we're actually seeing a hidden but like very fierce competition between two sides, two camps. On the one camp is Coinbase base, and the other camp is Jupiter, Meteora, Moonshot, Pump, Solana. And the disruption is happening bottom up because there's so many tokens that are minted and traded on chain that it's impossible for centralized exchanges to list all of them. And so they're losing a ton of business to CeFi is actually getting disrupted in real time in front of us. CeFi is losing business to DEXs. You can see that in the data. Like empirically, the percentage of trading volume on chain has been up only, and most of that is driven by Pump.
That's crazy. It's crazy.
So we're seeing real disruption happening right now.
It's crazy.
Like, and Binance is in the same category. Binance is going to get disrupted.
Binance, look, this is
like,
not coming from me.
I don't say this lightly. Like, if you asked me 2 years ago if I thought that Binance was going to get disrupted, I would have said no, absolutely not. There's no way. Yeah. They're like the largest, most powerful company in the space. But I think now they are getting disrupted.
I mean, you don't like, okay, Trump went to 40 billion, 30 billion FDV or something, right? Purely on chain, right? I think exchanges started to support them towards the middle end. But like, coordination of capital is so much easier on a global basis versus this micro exchanges across the globe.
Yeah.
And so I do think people are just going to go on chain versus exchanges. And I agree with you. Like, in fact, within the meme communities, Binance is now seen as a negative signal when listed.
Yeah.
Because tokens just go down only from there.
Yeah. Especially perp listing. Perp listing is
perp listing.
Perp listing is the pico top.
Yeah. Perp listing is the pico top now.
And then you see the same data on App Store, right? Like this cycle, it's Phantom, Moonshot that are often ahead of Coinbase.
Yeah.
So that should tell you that the normies are coming directly on chain versus going to a centralized exchange.
Yeah, I 100% agree. I mean, obviously Coinbase still has an incredible big business, and so they'll have like a structural moat from a.
Hey, did you see the FUD from Ari?
Yeah, he talked. Ari, the founder of Block Tower, talked to something. He didn't say directly what he knows, unless you read into it, but just said that there's something going on, and it has to do with like people losing money. Or Zach XBT talked about this, where over 150 to 300 million dollars is lost every year because of social engineering attacks.
He said what's like. First of all, I have no insider information. I don't know what he's claiming is true or not. But he said that what's happening within Coinbase is worse than Chokepoint 2.0.
Yeah,
that is a wild statement.
Yeah,
there aren't many things that are worse than Chokepoint 2.0. Like FTX is one, but maybe Terra.
It's all man. I don't know. This is I don't know. I trust Brian Armstrong and team, so I don't know. Another interesting aspect that happened that I don't think we really talked about was how Vitalik switched from a hardcore researcher to a or what he called a boy femboy or something. Now to a bronze aged milady. And so now he is embracing the community, which is a great sign, but or embracing the user behavior, because I think it goes back to what we talked about earlier, which is the users on Solana are very different than the users on Base. And so I think there is a key advantage to making those users happy or embracing those users, because they are the speculators. And so for him to switch to Milady and then also reply back with Milady on different tweets or whatever, kind of shows you that he's embracing the community now. That user demographic.
Yeah.
Too late or early?
Too late.
Yeah.
Too late. It's sad. I wouldn't, a year ago, I wouldn't have said it's too late, but I think it's too late.
I think it's too late too. We'll see. We'll see how the battle runs. But at this point, I think Solana's leading and then not too far distant in space, but I think they're losing share. And the one that's, I think, gaining share, the two that I feel like I could talk about is Hyperliquid, at least from Twitter perspective. But there's a lot of credible founders that are building on Hyperliquid. And so I feel like they're vampire attacking all the EVM degens. Hyperliquid should have been Blast.
Yeah. You mean Blast should have been Hyperliquid?
Blast should have been Hyperliquid.
Yeah.
But they fucked up. And because of that, the announcements are taking too long. I played around with the Blast wallet app. I don't even know what the Blast wallet app does. Like, you get 20% yield, that's fine. But there needs to be some utility for that wallet. Like, you can't just launch a wallet with yield, right? You could do nothing on there. And so that's my criticism of the Blast wallet. And so they lost it to, I think, Hyperliquid. Hyperliquid, I think, is going to take that EVM degen community and build something. Even if it's just purely just trading focused, I think that's fine. And then you have Sui and Aptos. That's going to, they hit all-time TVL today. So 1.86 million or 2 million or something, 2 billion, sorry. Something there. I'm not going to completely discount it and say there's nothing there. Something there. So that's the way I see it right now in terms of the competitive landscape. Do you agree or disagree?
I'm completely willing to change my mind, but for now, Solana is so far ahead of everyone else. I'm not saying the race is over, but I think the probability for an Ethereum layer 2 or for any of the other up and coming layer 1s to disrupt Solana, I think the probability is well below 50%. It's maybe 10-20%.
Yeah. And the launches are, these alt layer 1 launches are really, really important, the way you do it. And so far, maybe Berachain, outside of Berachain, using Royco as a way to build this massive TVL base, 1.2 billion or something crazy like that, which is great for a narrative perspective. A lot of the alt layer 1's launches recently, I have not been inspired.
Yeah.
It's not inspiring. So I hope that changes over time. And, I guess it only depends on the types of products that are being built on there. But that's kind of my view on layer 1s right now, layer 2s.
All right.
See you guys in 2 weeks.
Peace.
As always, the views expressed in the Good Game podcast are personal to the speakers and do not necessarily reflect the views of any other person or entity. Nothing here should be construed or relied upon as investment, legal, tax, or other advice. Thanks for listening to Good Game. Don't forget to subscribe. We'll see you next week.